agents falling out.
Okay. Happy rainy Friday, everybody. What I wanted to do today was a little bit, we're going to go through some of these market monitor stats, but what I wanted to do is give a reference point of what resales previously owned are compared to new construction as we're doing this. So here's, now that July is over, all the July numbers are in here. So I wanted to start with median sales price. So median sales price overall up 1.5%. So we're still kind of, relatively flat, not down, but, close to zero. But what I wanted to show to everybody was the comparison. We're going to go through each one of these tabs, comparing new construction and previously owned. So the 404,950 is all construction types. And before I click on this, I asked myself this question, and honestly, I wasn't sure of the answer. And the 404,950, is new construction higher or lower than 404,950, compared to the previously owned? So I didn't know the answer, but when I click on this, so 404,950 is the total new construction. And oh, sorry, I wanted to do a rolling 12 months to get rid of some of the seasonality. So new construction is almost 438, and then previously owned is 385. So I thought that was kind of interesting. The new construction is about 10% higher as a price than the previously owned. And the reason I'm doing 12 months rolling average is if you look at new construction, so many of those closings are at the end of the builder's fiscal year or end of the quarter. So there's a lot of closings in September and December. So it's too much variation month to month with new construction. But if you do a 12-month rolling average, it kind of gives a better perspective of everything. So new construction is up 3.1% over the year, and then resales 4.9. Remember, this is rolling 12 months. Now, the other thing that I thought when I started separating this was very interesting is on the previously owned, look at since January. What's the number? 385, 385, 385. Every single month is 385. So we have been previously owned has been flat the entire year. So I thought that was very interesting of how flat that has been. So, if I were a betting person, I'd say August is probably going to be 385. So again, keep in mind, is this a where do we go from here? We're going to break out one way or another, but it has been, the entire year has been very flat for previously owned.
Anton,
if we jump to price per square foot, again, we're going to just flip between new construction and previously owned. So if we flip to price per square foot. So on the new construction, we're at $200 a square foot. And it looks like it's still slowly going higher, which is, kind of inflationary type of progress. And then if you look at resales, so resales are $223 a square foot. So it's interesting, the resales, the new construction overall price is higher, but price per square foot is less. So the median price for resales is $223, up 9.3%. So this is higher than the price was higher than the price. So that's telling me a lot of the money that's going towards renovation is, renovating houses and then selling them, or a renovated house that's sold. It's driving this price per square foot up faster than the actual sales price. So people are improving the houses prior to selling them. And part of that could be the flips. If we look at percent of original price, so I'm going to go new construction first. So it's 100%,
Anton,
and it's been that way for a while. And again, new construction, you got to have to take it with a little bit of understanding of a lot of these deals they probably put in after the fact of the sale. So if a house sold for $565 that was new, the site agent might have just put it in for $565 and closed it out. Or it's the base price that doesn't include lot premiums and other upgrades, so it's going over 100%. So it's not surprising to see new construction just at 100%. If you look at the previously owned, we were at 100%. And again, rolling 12 months, so it's getting a lot of data in here. We're at 100% from July 2021 all the way till March of this year. And then we've been coming down from that point, on an annual basis. So we're having to be more negotiable on the previously owned, right? So we're negotiating here. And the other thing to keep in mind on the new construction is that, a lot of it could be something that they've taken out of MLS before, because some of these lot premiums and upgrades, it could change the house price by 10, 15%. So median percent of original price, they might have closed at 15% above.
Come on in.
So we're going back to what a normal level is, 97, 98%.
You're never gonna believe how it is. It's actually,
and we're headed that direction on the previously owned. So for those of you just joining us, what I'm going through is just everything new construction, previously owned, doing comparisons on all these tabs. Days on market. So we'll start with new construction again. Now, again, take this with a grain of salt too. It's new construction.
holding
Are they putting all their
the
listings in
CA,
MLS
holding
right
us,
away?
or
Are
something with the
they
system.
Just like,
so
there was like the title of it is how to
going higher?
maximize
So
use of
they're at
memory.
11
It's like
days on the
like
market
even like
on
the
median for new
scorecard, for instance, like
construction.
making sure that
Previously
agents
owned is
understand
at
that.
10.
We're getting
You
a lot
can
of like,
see
actually, I
over
kind of
the
know what we should
12-month
probably
period,
talk
it's
about, but, like, at the
drifting
same time,
higher
I still just want to
on
make sure
both.
that like,
Which
I'm
I
having
think
OCs
everybody would
reach out
agree
and they're
that
being
that's what
like,
they're feeling
hey,
too.
what does all this stuff mean?
Months of
Just like,
months
what
of
do you mean?
supply. So we'll start with new construction here. So
Okay,
new
thank you.
construction is 2.9 months. So we from the low of 1.5 last spring, we went up to about 3, and now we kind of seem to be in this high 2s to 3 level of months of inventory of new construction. Previously owned, we're at 1.6, and 1.6 seems to be, we've leveled out here. So there's faster absorption, twice as fast absorption on previously owned as new construction. That's just showing there's more available new construction, and it's just taking longer to absorb what's available to the consumer. Back to new construction, homes for sale. So it's up from where we were at the low back in spring of last year, but it almost looks like, are we kind of peaking on the new construction and we're absorbing as fast as we're able to put them on? So it's up 50% year over year, and we have, we're reaching this level here. On the previously owned, it's up 34%, so less, and this too looks like we're kind of cresting out on homes for sale on previously owned and the new construction. Closed sales, so I thought this was interesting. So closed sales, new construction, we kind of ramped really up quickly after COVID, and we're hitting 4,800 on an annual basis. And then we've kind of come down to this 4,500, 4,600 level. So it's very interesting. We are completely flat, zero. So zero, no change on new construction, completely flat. So year over year, we sold 4,500 homes, new construction. If you go back 12 months, the previous year, we sold 4,500 homes. So almost no change on new construction. But look at the previously owned. So if we flip to previously owned, 30% off, right? So we sold 12,689 previously owned homes in the past 12 months from July. So we're off 30%. So zero for new construction, down 30% for resales. So what's happening is, if you go back to here, and I did some math earlier, if I go back to here, I have 20,000 sales down to 12,689. That's off 37% on previously owned from here to here, 30% of that being within the past 12 months. So I thought this was an interesting perspective of what's happening. The new construction is very stable, zero, and the previously owned is way off. And what's happening is the builders are able to, supply chain issues, all that's being solved, so they have enough labor and everything to keep this pace. But they're also keeping this pace up by providing incentives, 4.99%, 2-1 buy downs, closing cost credit. So they're maintaining their pace because of incentives that they're putting in place too. Whereas the previously owned, they're losing their market share of sales over time because they're competing with the new construction incentives. And what I did while we're on this chart here, I went back, and I'm going to go back max in here, and you can see this is quite remarkable. So this is previously owned, remember? So pre-COVID, we're sitting here 14,000, 15,000 sales, shot up to 20,000, started coming back down, interest rates jumped up, and then we've fallen to below where we were pre-COVID. So the last time we had 12,689 sales in a year was right about here. So 2015. So I got to go back 8 years for us to be as this number on previously owned closed sales. So it's amazing how quick we went up. And again, this drop off here, I believe the slow decline was just because we didn't have anything for sale. From this point to here, this is that interest rate increase. Because remember, April of 2022 was about when the rate started to go higher, right? So this drastic decline, a lot of this is rate driven. But what I wanted to do was compare our new construction sales to previously owned. So, and I don't have this on the chart here, but if you wanted to write down some of these numbers. So we have, if you look at where we're at today, 2023, 26% of the closed sales are new construction. So that means 74% are resale. So 26% are new construction today. If I go back to in here, when we're at the peak of the sales, 19% were new construction. So we were 19% here, 26% here. If I go back further in time and I say, okay, well, let's forget COVID for a second. Let's go back to 2019. In here, we were at 22%. So 22% roughly seems to be a fairly healthy, balanced new construction to previously owned market. If I go back in time in here, post the recession, we had 23%. So we were in that low 20s% for many years in here in a stable percentage of new construction compared to resales. Now, if I go back to here in the building boom before the recession, which kind of created the recession. So back here in 2006, we were at 32%. So if we go forward in timeline, we were at 32% pre-recession, and then we were at 23% 22%, down to 19 was the lowest I saw. So 19% in here, and now back up to 26%. So 26% is a pretty high number of percentage of new construction compared to overall sales historically in this time period. Now, back in the recession, when we were at 32%, so think about that, 1 out of 3 sales was a new house, right? That is a big number. But 1 out of 3 sales was new house because so many people were speculatively buying, writing these contracts and building new houses and had no intent of living in them. So the 32% was, it should have been assigned to everybody in this business, you know, from a banking standpoint. That's too high of a number to sustain, you know, having occupancy of these houses by people. So we hit 32% here. We're at 26 here, but I'm not, this is because different than the recession, this was all speculative people buying new construction. Right now, what's happening is it's a high percentage because we don't have motivated resale sellers, right? We've had such a dramatic drop off in resales. That's what's driving this percentage of new construction up to 26%. But the reason why I'm spending a lot of time on this is like 26% of sales or new construction, that has to be part of your business, right? You don't really have a choice if it's that high. And it looks like to me, with this slope going down, so remember, we're off 30% on previously owned, where we're flat on new construction. Does this look like it's bottomed out? Not to me, right? This trend still looks like it's going down. If this number keeps going down and this number is flat, what does the percentage of new construction do? It's going to keep going up, right? So that 26%, we could go back up to where we were back here at 32%. So by the time we bottom out on here, we could have 1 out of 3 sales being new construction again. So you have to understand the sites where you can sell new construction and work those site agents, work with buyers out there, because that is 1/3 of the business, whether it's headed towards 1/3 of the business, whether you like it or not. And so you really have to remember that this lack of motivated resale sellers is creating an abundance in percentage of the buy side. Now, what this is going to do as far as the total number, I mean, it looks like it's not really going one direction or another, right? It's kind of just meandering sideways at this point. So I don't expect a big drop or rise, but look back in 2006, we had 5,700 closed sales in a year at the peak, and we peaked out at 4,700. So 15 years later, with 50% more people living here, we still had less new construction. So this shows how messed up this economy was in real estate back here. There are way too many new houses being built. So again, I feel like this chart was very important to understand. It's like new construction is stable on number of closings and resales are not. So we got to watch this going forward. And once we start to bottom out here, I do believe, you know, in the next year, I mean, we could have 1/3 of the sales being new construction. I mean, we could be that high here soon. Moving on to new listings. So new listings, and you can see up 4.5% for new construction, but like historically from 2016, doesn't that look relatively flat? You know, we're sitting right around 5,000 new homes a year, almost for what, 7-8 years, right? We're not varying much from that count. Where look at the previously owned. So previously owned, this is an eye opener, right? We went from new listings from 20,527, and look at the date, right? June of 2022. What happened to interest rates? And here we go, right? Here the high interest rates have demotivated resale sellers. And this is, and you can't have a clearer chart than this one. I mean, this is, we have created people that are staying put in their houses with those higher rates. And again, if you look at this, is it bottomed out? Doesn't look like it to me, right? So we are still in a fight for sellers to sell their houses on new construction. We're off 22.5% on the resales. New construction's up 4.5. So, positive, but relatively flat historically. And then this, we're dropping down to levels 2023. If I go back to last time we were at this level, you got to go back 9 years, right? So we were increasing over time, and you can see that dip right when COVID happened, the increase, and then the high interest rates have just fallen off the cliff.
And Anton, wasn't 9 years ago?
Pending sales, we'll start with new construction again. So pending sales. So new construction up 14.1% year over year on a 12-month rolling average, right? And you can see that increase happening right here. So we're going back up again on new construction. If I flip it to previously owned, it's the opposite, right? So we peaked out in May of 2021 and we've fallen off. Now, I'm not willing to say we're at a bottom, but it's very interesting, and I'll zoom in a little bit. So it does look like we're not decreasing as fast. So remember, this is pending sales. So this is forward looking of like what closings do we have coming up? And so I feel like this is a positive indication of, okay, are we getting closer to bottoming out on pending resales? I would say, well, let's give it a couple more months, but I think it's promising that we are starting to do that. Now, if I go back in time again, when you look at pending resales, we're basically at the peak we were pre-recession is where we're at right now. But if you look at, I'm going to zoom in again real quick. So if we look at monthly, so I'm flipping off the 12 months. If we look at monthly, so monthly, we're only off 4.7%. So this is what tells me we're probably bottoming out. So if you look at a 12-month period, we're off 27.5%, but just last month, we're only off 4.7. So as this number starts to get towards zero, we are in the process of bottoming out. And we've had some very hard comparison years, year over year, because last March, April, we were closing a lot of deals, and then it fell off with the interest rates. So as we start to go towards September, October, November, December, this year, it will be easier comparisons to last year, and eventually this will go to zero and then positive, and we can say, okay, now we've bottomed out on resales, and we can start to head higher, but we still need to generate motivated sellers to be able to have closings, right? If you don't have a seller, you can have a closing. So the new listings is, and I'm flipping back to new listings, previously owned, we're off 22.2% in July of 2023 compared to July of 2022. Now, if I go back to the 12 months, it's about the same. So we haven't slowed down the motivation. It doesn't appear that anything has changed with the motivation of sellers. They're still not wanting to list their houses because of the interest rates, because this isn't changing. The pending sales have changed, but not necessarily new listings. So we still have to work, especially on this, to be able to get to pending, to be able to get to close sales. So it's and again, we also have the seasonality returning, right? So we're heading into the slower part of the season for sales. Dollar volume. So let's flip over to new construction. So dollar volume up 8.1%. And that's been a steady growth, right? I mean, if you look at new construction sales, it's been a steady growth. If you look at previously owned, again, the other story, we peaked out spring of 2022, and we've been going down since. Again, for this to bottom out, we need the pending sales to bottom out. And so it's all connected to each other. Doesn't quite look like we've bottomed out yet, but hopefully we're working on it. And then finally, the last two charts on here, you have, we have shows to pending. Again, new construction doesn't really have much meaning because most of them don't use showing time. But just to show you, I'm going to go to monthly here. Just to show you over time, it's the conversation you should be having with your sellers. It's like, if you get between 10 and 12 showings, you should be going under contract. And if you're getting more than that and you're not going under contract, that's the market saying you're priced too high. And look, I mean, this is, again, Showing Time came online in 2012, right? So before that, data is not available. But look, it doesn't matter. Even, we had this spike in the COVID years, but you're between 10 and 12. It doesn't matter what market it is. So if you're hitting those numbers and you're not going under contract, and you need to be proactive when you're talking to your sellers, say, if we get to 10 to 12 showings and we don't have offers and we don't have a contract, the market is telling us we're overpriced. You don't need to wait for 30 showings. The market has already spoken. Shows per listing, and again, I'm going to skip the new construction because, again, they don't really use it, but you can see the wide, and again, this number was so high here because we had nothing for sale. When you have 900 homes for sale, everybody's looking at the same houses. But, we're returning back to, and again, this is shows per listing per month. I wish they would kind of put that on here. So this is showings per listing per month. And look at historically, we're 4 to 6, right? So 4 to 6 means you're either getting a showing a week, maybe some weeks you're getting 2 showings a week. But what's happening, it's being, since COVID happened, I feel like the showings are getting condensed within the first 2 to 3, 4 days. Everybody's running out and looking at it, and watch your next listing that you put on. It's like you're going to get a ton of traffic the first 4 or 5 days, and then watch your showings just almost disappear. It's happening very quickly. So don't let your seller realize that it's like, okay, well, yeah, I got 10 showings the first 3 days, so I'm going to get 10 the next 3 days. That might not be true. Don't have false expectations as a seller that that showing traffic is going to maintain that pace. So, I thought, for today, this is like a good exercise of looking at what's happening, on the new construction compared to resales, and especially when we look at the closed sales. And you can see this is previously owned here. So I'm back to the closed sales and I'm just doing monthly. And you can see the seasonality, right? Here it is. There's the seasonality. Some pretty dramatic seasonality for a couple of years. And then it's so easy to tell where the interest rates change, right? Just a massive fall off and trying to recover back. But we had resales, we had 1,041 resale closings in July. Right? When was the last July we had 1,041 resales? And I know John and I looked this up. I think it was 2013. So if we go back to 2013, we had 1,089. So if you go back to 2012, we had 786. So 2013, sorry, the last time we had this low number of resales was 2012. And this is all MLS, right? So we are experiencing a need to help these sellers, and the sellers are out there, but they're hesitant because they want to know where they're going. And when they do the math on the new house they want to buy at the high interest rate and higher prices, that's where the hesitation is coming into play. So we have to definitely become creative of trying to write contingent contracts, right? And again, I encourage you, instead of calling the listing agent, say, hey, would you consider taking a contingent offer? Write it up. Put it in front of them on paper, that they can actually do the math and see that they can sell their house if they're willing to accept a contingency. I know not everybody, if you're competing with offers that are cash or don't have a home sale contingency, you might not win it, but you're certainly not going to win it if you don't put something in front of that potential buyer seller. So and I was looking over my list, and it's like a lot of my clients, they're buyers, but they're sellers at the same time, and that's where the hesitation is coming into play. And you can see it play out right in here with our number of closed sales for resales just still dropping down. I mean, there is some sort of slowdown happening here. It's just how long it's going to take to really bottom out. And we had some tough comparisons. It's really hard to compare resales to 2021. So that's what happened in 2022, especially when the rates went up. That's a hard comparison. And we're still fighting getting back to a level of if you know rates are 7%, then they're 7%, and you know buyers have to get used to that. Yeah, Sean, you had a comment, question?
So for the closed sale,
Hand raise in the,
can you hear me?
I can't.
No, you can't hear me.
Anybody have any comments, questions to add? Yeah, Sean, can you hear me?
I can hear you. Yes.
So again, anybody have any creative ideas to convince sellers? And I mean, what's your reaction? What are your reactions with sellers right now? All right, there's some people in the chat here. I can't hear Sean. Well, maybe somebody can. Sorry, Sean, I don't know why. Oh, I think maybe John can hear you now. Okay, go ahead, Sean.
You can hear me?
Yeah, I'm in his office.
No, Sean.
Yep.
Yeah, Sean, yeah. please.
Go ahead.
Well, I got it to here. So, Anton, what I wanted.
No, is on the, back to your, so you're still on previously owned. I can't see now. That's why I didn't want to come over here. Are you on monthly still?
He's on sales price.
Okay, no, go back down to closed sales. I've been trying to ask this for several minutes. Can you go back down to closed sales?
Here, have a seat.
New listings,
New list.
all three of those, pending, new listings, and closed on a monthly basis.
Yep.
And we were talking about the closed sales. I want to see if those patterns are the same for new listings and pending sales.
Yeah, I mean, we're everything.
For the previously owned, right?
Yeah.
Because we're talking about what.
And everything's dropping, you know, because, you know, your new listings are going to turn to pending sales, are going to turn to
Correct.
sales. So
Right. I just wanted to see if there was any difference, so in the trend or the pattern. Can we tell?
it's very similar.
And you're on monthly, right?
He's on rolling 12 months.
Yeah,
No,
I mean,
go on monthly.
so I mean, we're off 22% on new listings, which means we're off 4.7 on pending sales. And then closed sales, we're off 24.6.
So see, that's saying something, is it not? I know
Well,
1 month does not make a trend, but
if-
it's still,
If we're not listing resales, eventually that's going to catch up on pending sales.
right.
If-
So I think it
if we're-
shows how dramatic it is. And then the
If we're
other
off-
thing, sorry,
If we're off 22% on new listings, it's going to translate at some point to being off 22% on pending.
I just thought it was important to look at that difference on a monthly, like that this trend is continuing. That's kind of what I wanted to confirm, that that's what's happening. And the other thing is, when you pointed out the dates of like 2013 and all that, we were still coming out of the recession then, weren't we?
Yeah, so I mean, when you look at closed sales, I mean, it took us a while to recover, you
Still
know,
in
so,
recession.
but by the time you hit 12 and 13, that was the big growth, right? That was kind of where the moment we probably washed out a lot of the short sales, a lot of the foreclosures, and we were going back to normal, right? So right in here is where
You're transitioning, yeah.
yeah, so, you know, the short sales and foreclosures were all in here. By the time you hit 13, we were
Thank
kind
you.
of past.
You could sit down.
So yeah, I mean,
Thank
we have to get past, you know. We really have to get, whoops, sorry, Don. We really have to get past, you know, this period of time where we have, and again, not that I can predict everything, but if I were guessing where we're headed, is that we're in this high interest rate environment for a bit, right? And we have to get to the election of next year to, you know, the next 18 months. It's like we're in this high interest rate environment and very low motivation on resale sellers. So you better work that new construction hard, as well as, you know, trying to help the sellers that want to move get a contract on a house that they want to move to so they're comfortable in selling their house. We really have to become creative with that, because that's a lot of times the only way they're going to list their house is because they know where they're going. So it's the twofold: new construction and helping the sellers basically having a place to go so they don't feel like they're going to make themselves homeless by just selling their house. Because where you're still, when you look at months of supply, 1.6 months of supply and previously owned, that is, if you look back in time, that's a better seller's market than we've ever experienced, right? The last 3 years is a better seller's market than I've experienced in real estate. Right. So we're still a hyper seller's market, no matter what everybody says. I mean, sellers might get mad their house didn't sell the first weekend. It's still a seller's market. Right. And if you're pricing your house right, you can sell it relatively quickly. So, the two main points I want to leave with here is that, that percentage of new construction is going higher still. So you really have to understand that this is part of the business for the next couple of years, is working that new construction part of the business, but also really working hard with your existing sellers that want to be buyers and finding solutions for them. So, and some of them, it might be, if they need to sell their house and there's no way they're getting contingencies, it might be having to sell and going to a temporary place and then, being ready to react when the right house comes on the market. It's, to make that transition right now for our local people who want to move, it's a challenge. So that's how we can help ourselves, with the previously owned in these categories here, because until this new listing picks back up, it's not going to translate to the closed sales, right? So we really have to, and if you look at, the peaks, look how much lower the peak was this spring, summer for previously owned new listings. Look how much lower we were. And you got to go back to 2013, basically, to see a similar type of peak. So, we are struggling to convince local people to sell their house is essentially what that means. And it's all affordability. Both sides are affordability driven, right? Buyers are nervous because high prices, high rates makes it unaffordable. Sellers are nervous because they got a really low house payment on their existing house. So it's an affordability issue with them leaving their house is why this number is a struggle to get much higher. So, again, if, when you're working deals share with each other, it's like successes that you've had with convincing sellers to be buyers, how you make those deals happen. And get familiar with those new construction neighborhoods, because I think if that's a third of your business coming up, it's like you have to be spending time out there. So, it's part of the business right now. All right, anybody have any more questions? I'm sorry, I don't know why my volume's not on, but if anybody has any questions, you can put it in chat, or we can wrap it up on this rainy Friday. So, all right. Well, everybody go sell a house or two this weekend. One would be fine, right? Just go sell one house. So, all right. Thanks again for joining and have a good weekend.
Thank you.
You're welcome.
Thank you. Can you hear?